What's up everybody? Tom here with another video. In today's video, we'll be talking about the week ahead for the stock markets and why this chart may hold the key to what is going to happen over the next coming month. We'll also be taking a look at our technical analysis for the Sp500, Nasdaq, Bitcoin, Dogecoin, Tesla, and more. It's earnings week in the US and the big companies are just about to get started. Stay tuned. Alright guys, well, as we like to do on this channel, let's take a look at what happened in the previous week on the stock market. And it was a very interesting week. We had Nvidia coming out with a 10.5% week. We had Tesla doing 9.27%. And of course, we had the healthcare sector really coming back into its own light as it was an underappreciated sector along with utilities, and both did do better than the others. We had bank earnings. Bank earnings came in. They were around expectations. So far in the beats and misses, it looks like the US is basically hitting a lot of these lofty expectations. But of course, week one of earnings only just started last week. It's now about what happens when the bigger companies start pushing it out, specifically the tech sector. Let's have a look at Friday's moves. We had the Dow Jones up 0.54%, S&P 500 0.39%, Russell coming in a little bit weak late, and the Nasdaq 0.06 on the day. When we take a look at the sectors, you'll notice that materials was on top. Another strong day for XLV. XLV's been in the top kind of 2 to 3 performers most of the week. And then we had technology really slumping at a 0.02% with energy down the most. But take a look at this. This is the week that we've been waiting for, a week with some big company earnings. We, of course, have Coca-Cola earnings here before market open. Come join us live. We'll be taking a look at the Coca-Cola earnings report live here on the channel, 1.5 hours before New York open. And then we have Johnson & Johnson, IBM, Netflix. I'll be specifically watching Netflix very carefully. And then later on the week, we have Snap, Intel, and other large companies. So these tech companies, this is going to be the beginning of the taste for the stock market on how well have things like Netflix and Snap and Intel done over the last quarter. Have they performed in line? This is where we'll really be dialing in together on the community with beats and misses and really trying to figure out the next levels for the stock market moving forward. Let's have a look at some other key indicators for the week ahead. We have PCC, put call ratio, sitting at around 0.797. This is not a bad level for the bulls. Basically, if everyone is still buying puts, as in protected puts, and you can see this is starting to move up, so puts are being purchased at a higher quantity, then it's unlikely the market will fall. It's when people don't expect it to, and this is probably one of the best indicators of that, e.g. we hang around the 0.6s for a little while, that we do get a flash sell-off or a flash correction. Of course, this week's about earnings, so things will change straight away like that if it's going to happen, but we'll be here together talking about that on this channel. Let's have a look here at the dollar index, another big one that looks for risk on, risk off. Dollar index finished on its lows or close to its lows for the end of the week. It wasn't even able to rally back up to the 92, which it broke earlier. And we knew this was going to be a strong movement for things like gold. It was going to be a strong movement for things like the S&P 500. And I'll just quickly go to the daily here because we have a long leg doji here, an indecision candle. We haven't broken either way, but if we get a little break on the daily to the downside, not only are we going to go, of course, to the 91.40 support, but I think it could even stem for further selling pressure on the US dollar. So it's really close now for us to basically either see a strong dollar come through or further weakness if it gets through that 91.40. US dollar not looking strong. Take a look at this weekly. You'll see it again. Weekly close below the 20 exponential moving average. Not a great sign if you're a dollar bull fan. This has really gone the way of last time. The 50 exponential moving average was buyer dynamic support. Now it looks like it was seller dynamic support on this channel. It didn't quite get to that 94. It basically got 93, close to 93.50, sold off, and the 50 was just too much for it. That's why you got to keep paying attention to the charts whenever possible. Now, of course, dollar index weakness. What has happened? Well, the sleeping giant, the actual supposed hedge to the stock market, has actually awakened, and this is gold. You can see here the support down the bottom, the big bullish hammer that occurred 2 weeks ago. then the follow-on effect that occurred, showing us that there was definitely buying pressure there. In fact, this was strong enough for many people probably to start taking a nibble at it. And now we've closed above the 1760 zone. So on the weekly, it pays to have your charts up here in the time frames, because you'll notice the 50 exponential and the 20 exponential. So while we're through 1760, I think it's still going to be a little bit of a tough week for gold, because we go down to the daily and we think about this. So we've broken through, we've closed above 1760. We've had that initial spurt to 1783, a great move for gold. Now it could come back this week, find some support on the 50, find some support on the previous resistances, and then bounce back up. If we clear those two weeklies though, boy oh boy, is gold going to be back in the bull run, because at that point there's not much holding it back. We know also from a double bottom perspective, gold should go around this distance, and a double bottom perspective would proof into previous supports all around that 1830. So look, gold has a lot going for it this week. It's well worthwhile checking out. And I think it's going to be that one that suddenly everyone's going to be talking about. The mass media will talk about it when it's probably around here. We're here, and gold hasn't really been discussed that much. And that's the key. We're getting in before other people are seeing it. And that's what we do here as a community. We always are looking at charts, technical analysis, and trying to find key zones where rotation of money is coming through. It's that rotation that we're trying to find. Let's have a look at silver. Silver finished the day pretty poorly. Basically went up to close to the resistance of the 2650, went 2630, sold off here. Little bit of a bearish looking pin bar or shooting star style candle. We don't want it to make any new lows. Ideally, it would open up the Monday, continue strong, and if it closed above here, it would most likely smash this top off. I don't see why, after taking out a top like this, if we got a close up here, so close means that daily would have actually finished for the day and it would be locked in time, so you can't take it away. This would show so much buying momentum that would be moving towards all of a sudden the 28 zone. So it's a bad looking candle, but a good looking candle if it's able to be closed above. Let's move over to the talk of the town, things like Bitcoin, etc. You'll notice Bitcoin is right on support, so just underneath 60,000 right now. A series of basically selling, buying, selling with new troughs, lower peaks, lower troughs, etc. You want this sequence to be broken right now and support to be found if you're a Bitcoin bull. Like basically this level of resistance needs to become support, and it needs to become support during the next 24 hours. You can already see the pressure's been put on it only a few hours ago. This is a 2-hour chart. It needs to hold the 59.50 zone. If it doesn't, what happens next? When we go to the daily here and we think about it, this could be really bad, because guess what? We've got like our trend line that goes through, but depending on which trend line you want to draw, if you've got like the trend line going through these two lows, that's the type of thing it looks like. If you've got a trend line drawn between these ones, then of course it should be finding support right now. And if you have your larger trend line through these bottoms before, then it's got one a little bit behind. But I think basically if it's unable to hold this zone, you could be seeing a significant enough pullback that it could go, well, down here about $2,000-ish, and then even go back possibly to the 56, the real horizontal support. You guys know that I'm a big fan of horizontal support resistance over trend lines. So that's why I think 56 could be open if we actually close under this daily again. That it might go the trend line, sure, but I would like to see it hold here and now to continue the bull case for Bitcoin. It must hold at that zone. At the same time, we had Doge. We did the live stream on this on Friday. Oh my God, this thing was crazy. It was just moving so fast. And my kind of call on it was 50 billion valuation. Now, I took a snapshot of Doge, and at one point, it might have been even higher than this. I didn't do the full calc, but I think it was like 58 to 60 billion. So it went higher than my 50 billion thought process. I thought it would push towards the 50 bill, which is probably around here, and then it would find some level of resistance. It certainly did everything a standard blow-off top does. So what I mean by that is look at this. Look at the percentage here. So we have over a 30% decline incredibly quickly. You then have a rally that occurred here that was very symptomatic of exactly what you would see during a blow-off top. So the rally went to a 61.8. It's actually a textbook blow-off top. Massive sell-off, rally to 61.8, new low. So what I expect for Doge now is a little bit of consolidation. Basically, it will hover around this zone. If it truly can hold up here, it's pretty amazing. But I wouldn't say that Doge is done in terms of having rally spikes on it. But I do think that that big rally over here won't be met anytime soon. I think it's going to go probably like this, slowly degrade for a while. Maybe it goes down to 0.2 or even further down to the 0.1. And then it's kind of like that GME situation where GME out of nowhere, when it went back down to 50, sat there for like a month and then just broke out. I feel like Doge could do the same thing. What do you guys think? Do you reckon Doge will ever return back to these highs? Or do you think this was a one and done move? Let me know in the comments down below. I'm very interested to see what the community thinks on this one. Let's move over to US oil. So US oil broke our channel to the upside. Basically, we are now thinking that oil will have a fairly decent run on it. If you take the distance of the channel, you extrapolate that out, you'll notice here it proofs perfectly back into these 66 highs. So it's sitting at 63 right now. I could see this week either pulling back, buying pressure here, and then moving forward, or it continues to coil here for a little while. Once it gets through 64, we see a price momentum up to around that 66.50. So oil is once again a trade or a concept that you can be looking at. It's been boring for a couple of weeks. Now we're back in a form trend, at least as far as the technicals are talking about. And of course, you'll see your standard articles if it gets up here being written when it's at the peak. So be careful there. But yeah, oil on the breakout at this stage. Let's move over to some stocks in the stock market indices. We have Tesla here. Good work, guys. You held the support. 720 held again. You'll notice the market pressured it, and that stupid 740 became the resistance at the close. I would have loved to see this daily above 740. Do you know how much I wanted that? Instead, it closed at 739.78. Good news for Tesla, 740 continues to hold. The other good news, earnings coming up. What do we know about Tesla? It often likes to buy into the rumor and then sell the fact. So if that trend continues, once we get past 740 on the daily close, which is going to be significant, we've talked about it a lot, it's the only little bit of pressure over here. We move back towards the 780 and then back towards the 800. Now the 800 is really the mega zone. That's the one that if it gets broken above, oh, you can be very happy because 800 was the supports. And look, there isn't much next resistance until 880. So Tesla has some exciting stuff going on. Look at this daily 2050 exponential. It's about to cross. There's not much bearishness here. So people are saying, oh, Tom, it looks bearish. I don't see bearishness. I see mostly bullishness here on the charts. And again, earnings. I'm just drawing little triangles around it. And that's because it often buys into the rumor. Go back through history. And what you'll notice is it consolidates, sometimes buys in. It sometimes just buys into the earnings just before. And then just see how here it had 21. So it sold off a little bit before. But look at that run that happened. So there was a run that happened up into resistance. Now, where's our resistance? 800. So what if we get a run back into the 800? It makes a lot of sense. I think people are getting a bit optimistic. You've seen upgrades on Tesla. Things are happening over here. Things are happening. Okay, so let's move over to the stock market indices. 224 closure on IWM. Yeah, look, nothing here looks bad. Basically, we've got the horizontal support continuing to hold through the week. You can see the coil here, which is effectively price action just being trapped within a zone. Slightly higher lows. See that, guys? Slightly higher lows on the 2 hour. Good time frame to be looking at. We go over to the daily. You'll notice here, little bits of buying pressure coming through. Yes, they're ending negative sessions. However, they're still being purchased up. And that means that the Russell 2000, the small caps, there are some buyers out there for this. Weekly ended with a nice rejection wick. This is a series of buying momentum style wicks that have come through. Again, signaling further bullish pressure could be built into this one. It's been a bit of a sleeper now. Look, it's super overpriced in many metrics. Don't get me wrong, but the market is in general. So we're just looking at the price action. The price action is calling for a 230. I'm starting to feel it. I want to see one green candle. Let's get a green candle so we can move towards the 230 on IWM. Hopefully with some good earnings this week. Nasdaq 14,041. Let's put it in perspective here. We'll go to the weekly. Check that out. Beautiful movements here. Very strong. We were with it on the channel here. The Nasdaq the whole way up. We've been very, very strong on this chart. And it's all because of this breakout here. So when this breakout occurred, zero bearish intentions. really at this point, it was all bull, all good. And that's because the sequence is in. We took this distance here. We extrapolated that out. It gave us just like a 14.4 level. Now that we're in earnings, we're pretty far away from the daily. So earnings has to take the cake. We need Netflix to come through. We need Snap to come through. They have to blow it out of the ballpark. And if they do, you'll start to see the price of the index reprice itself to it. We're in the hands of the fundamentals now. Whether you like to admit it or not, the technicals look strong. Their anticipation, the euphoria is real, but it has to come through on the earnings. If it does start to decline, I expect the daily 20 to pick it up, and that is down here. So you're looking at a little bit of a decline. Let me have a look at the percentage on this. Percentage-wise, you'd be talking about 3.56%, and then hopefully buying pressure comes back in, because even with some bad earnings, you're still going to be waiting for the Facebooks, the Googles, the Apples of the world coming out with their sessions. SPX, Sp500, I noticed a few people saying, Tom, the R2 has been hit, the R2 monthly pivot. Absolutely it has. R2 monthly pivot got hit on the Thursday session. Friday session closed above it. It's actually pretty rare for the monthly pivot to be breached. So what I mean by that is have a look at this monthly R2. Not very often that it breaches, but often when it does, it's leading to overextension in the market. So I think that's where we are right now. I think this is like a buy the rumor, get a bit of earnings in. And if this continues, I'm telling you, it may actually be sell in May and go away, because we are 18th of April. We knew April was going to be a banger. It was going to be a very good one, but May always has shaky statistics on it. And because we're in the community trend line. Look at this, the community trend line resistance. It's being reached, guys. This is just being breached and reached right now. So euphoria is real again. We have to watch the PCC, the put call ratios. We have to be laser focused on the S&P 500, and we have to watch each and every earnings. As I said, this earnings has a lot at stake because of the way the price action's moving on the S&P 500. R2 being breached slightly. We're outside of Bollinger Bands on quite a few of these indices as well. And any pullback, you're looking at it going back down to the 20 exponential, because that's been the one that's been finding dynamic buying pressure. It's always been pulling back to that in previous history, so we might as well use it again. It's around a 3% decline from current price. So we're going to have to watch it. We're going to have to see the earnings, see whether the fundamentals can pull us through. I hope everybody's having a great weekend. I hope you have a great week ahead. Remember to subscribe, smash that like button if you enjoy it, and come and join us Monday for Live Open. It's going to be so much fun this week, guys. You have to come to every single one of the sessions, and I mean it, because it is earnings week, and it's going to be earnings week for the next couple of weeks. It's just the best time in the stock market because there's so much news, information, and interesting little tidbits to pick up from. We'll see you there. Bye for now.